Question. Accountants treat a business as distinct from the persons who own it. This concept is termed as option A, business entity concept, option B, money measurement concept, option C, going concern concept, option D, dual aspect concept. Answer option A, business entity concept. The assets which constantly change in value through transactions that are entered into are called options A, fixed assets, option B, current assets, option C, floating assets, option D, tangible assets. Answer option C, floating assets. The accounting practices should remain the same from one year to another as per option A, convention of consistency, option B, convention of conservatism, option C, convention of disclosure, option D, none of these. Answer option A, convention of consistency. Retained earnings is a option A, liability to the management, option B, asset to the company, option C, liability to the company, option D, none of these. Answer option C, liability to the company. The arithmetical accuracy of the accounts can be checked by preparing options A, balance sheet, option B, trading account, option C, trial balance, option D, profit and loss account. Answer option C, trial balance. The dual aspect of accounting is ensured in the option A, double entry system, option B, single entry system, option C, double and single entry system, option D, none of the above. Answer option A, double entry system. Transactions are entered in the books of account at the amount actually involved in the concept of options A, cost concept, option B, dual aspect concept, option C, going concern concept, option D, money measurement concept. Answer option A, cost concept. The balance sheet is also called options A, income statement, option B, position statement, option C, transaction statement, option D, asset statement. Answer option B, position statement. Question. The shares whose value which fluctuates in the market with the fortunes of the company. Options A, bonus shares, option B, preference shares, option C, equity shares, option D, none of these. Answer option C, equity shares. The maximum capital that the company is authorized to raise. Option A, subscribed capital. Option B, nominal capital. Option C, called up capital. Option D, none of these. Answer option B, nominal capital. Super profit method is used in the valuation of options A, floating assets, option B, goodwill, option C, fixed assets, option D, current assets. Answer option B, goodwill. The issue of debentures is regulated by options A, SEBI, option B, Controller of Capital Issues, option C, RBI, option D, Finance Department. Answer option A, SEBI. When one company takes over another company, it is called option A, amalgamation, option B, external reconstruction issues, option C, internal reconstruction, option D, absorption. Answer option B, absorption. When the shares are issued for the first time by the company to the public, it is called option A, bonus issue, option B, right issue, option C, initial public issue, option D, none of these. Answer option C, initial public issue. When shares are forfeited, the shareholder, options A, relieved of his duties, option B, gets the benefits soon after the forfeiture, option C, name will be removed from the register of members, option D, no effect. Answer option C, name will be removed from the register of members. Issue of bonus shares can otherwise be called as option A, redemption of shares, option B, capitalization of profit, option C, public issue, option D, none of these. Answer option B, capitalization of profit. The aggregate of the shares and other securities issued and payment in cash by the buyer company to the shareholders of the vendor company. Options A, sales consideration, option B, selling price, option C, purchasing price, option D, purchase consideration. Answer option D, purchase consideration. Question. The amount of expenditure, actual or notional, attributable to a given thing. Option A, cost. Option B, profit. Option C, loss. Option D, expense. Answer option A, cost. Next question. The optimum quantity for which order is placed when materials are to be purchased? Options. A, purchased quantity. Option B, EBQ. Option C, EOQ. Option D, purchase order. Answer option C, EOQ. The method of ascertaining cost in those industries in which goods are manufactured or services are rendered against specific orders from customers. Option A, contract costing. Option B, product costing. Option C, operation costing. Option D, job costing. Answer option D, job costing.